Here's the math on how to generate 20+% per year returns by investing in small Main Street businesses. We're going to use a real world example. We have a company based in the Southeast that drills water wells. Now this is a deal we've looked at. They're asking $2.5 million for the purchase price, $750,000 for the real estate. And we've confirmed the cash flow is around $950,000 per year. We know the person who's buying this business, they have a family history operating these types of businesses. Their family has been in the water well drilling industry for decades. This individual has over 10 years of direct working in the field experience, project management experience, really everything you're gonna need to run this business. The only thing they lack are the funds to make the down payment, which is about $100,000. So what it means to invest in a business like this is that typically investors get a 2-for-1 step up. So what that means is for every 1% of the deal that they provide the capital for, they get 2% of equity. So in this instance, because of the buyer's strong work history, banks are only going to require 2.5% down payment. If an investor makes that entire 2.5% down payment, they own 5% of the business. Obviously, in another example, if the down payment is 5, investors are gonna own 10. Now looking at this business, the assumptions we're gonna use, we're gonna say that this business is gonna grow revenue at 5% per year, and its expenses are gonna grow 3% per year. So the cash flow available to the investor's 5% share of the company, it starts at about $13,000 per year, and it grows to $40,000 per year in year 10. Now, if you assume the business is sold for the same multiple that it was bought for, 10 years later after the loan's paid off, they should be able to sell their share in the company for about $212,000. And let's just assume that the real estate appreciates 2% per year. The investor's share of the property would be sold for $46,000. So this $100,000 investment within a period of 10 years would generate about $262,000 in cash flow, roughly $212,000 from the sale of the business, and roughly $46,000 from the sale of the real estate. Altogether, that's a total of $520,000 from a $100,000 investment. Now, it's really important to keep in mind that this area has really high potential returns, but obviously it's really risky. Putting in that low of a down payment and having that much of a debt load on a company is obviously really high risk. Smaller companies have more volatile revenue streams also than larger companies. So I'd say investing here is probably also the highest risk space, but it's also the highest return. And I think because of that government subsidized leverage that comes in, that risk return ratio ends up far better here than it is anywhere else. But you should go into any investment knowing what risks you're taking. And one thing that helps from the investor side is that it's the operator that's providing the personal guarantee. The investors are not on the hook for the loan. So if things were to go sour, the loss is limited to the amount of money invested in the company. It's the operator that has to provide that personal guarantee, which means they're likely putting their home up as collateral. And if the loan were to go bad, their home would be foreclosed on. So that gives them that. People always look for that skin in the game. These borrowers are going to be highly motivated to make sure the business does well. And the overall default rate, depending on year, ranges between like 5 and 8% for SBA acquisition loans. So like any investment, really the best way to go is to build a portfolio of these companies rather than throwing everything at one. And it's important to note this is just an illustrative example using a real company, a real situation. We're not raising funds for this particular example through this video. We're just trying to provide you insight into the market, and we think using real numbers is really important. Now, if you want to learn more, check out our link in the bio and we can talk through a deal.